All right. We are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day, great week, wherever you are and whatever day it is for you. It is a good day here on the show. As I said on the last episode, I just got back from my honeymoon, so I am like getting back into the swing of things. We went over to Spain, had a blast over there. It was like 10 zillion degrees. So being from Seattle, it was kind of rough for us, but it was still a lot of fun. But that's something our guest today knows a lot about from Arizona. We got Brian Tibbs with us here. He does short-term rentals, sober living facilities, and single family. If you guys are interested in any of those asset classes, this is the episode to tune into. So Brian, I'm excited to jump into this. Thanks for hopping on.
Yeah, thanks for the opportunity. Excited about it as well.
Yep. Oh, and I forgot to mention his brand is The Unexpected Investor. Brian, I told you before we hop on here, we always like to start this show with stories. We like to hear how people got to where they are. So why don't you take us back to the beginning of your story in real estate and tell us how you got here?
Yeah, well, I grew up in a family that my dad owned his own small business, but wasn't a real estate investor. And I remember when I was 17, he was talking to my grandfather, his dad, about buying a duplex. And I just kind of was eavesdropping, and I thought it was ridiculous. Like, why can't you make more money in the business? Why would you buy a house and then expect some stranger to actually pay their rent? You know the bank's going to make you pay them, and then you got to unclog toilets in the middle of the night. I mean, why would anybody do that? And when they realized I was listening, like I spoke up, actually, I said, why are you doing this? When they said, let's call the agent, I'm like, no, stop, you're making a mistake. And they realized that this self-absorbed teenager was paying attention. And so they actually shifted their focus and tried to kind of teach me, this is why we're doing it. And they laid out the numbers, and they said, we're going to hire a manager. We're not going to unclog any toilets at midnight. And yes, they may skip a month's rent. We may have to kick somebody out, but we've accounted for that in our numbers. And they just went through the whole thing. And I remember getting to the end of that thinking, well, if it works on one, why don't we do 10? And they just cracked up laughing, kind of a thing. And so at that time, 16, 17 years old, I guess I maybe subconsciously decided I'm going to be a real estate investor. And then when I was in college, I moved out of the dorms. I was 19, and I was looking at my options. I didn't want to pay rent. I didn't want to just go buy a house. There's no way I can afford the mortgage. So I decided what we now call house hack. I bought a duplex, lived in one side, rented out the other, which is what we called it back then. Not as elegant as house hack, but bought a duplex. And when that worked out and I ended up paying, maybe $100 or $200 a month for all of my expenses to live, I was like, okay, let's do this. And I set the goal to add at least another unit every year. I mean, forever in the future, right? And so by the time I was 26, I had 10 units, and that's the direction that I wanted to head. Took a crazy turn. I actually decided to follow a calling that I felt that I had on my life. I decided to move to Guatemala with my new wife. So we moved overseas, and we were going to do it for a year or two. We ended up staying for 16 years.
Wow.
Living all over South America, and but all the while, kind of with like a little bit of a corner of one eye on the real estate, just kind of kept taking care of it and upgrading properties and slowly building the portfolio to the point to where when we retired from that overseas work, our portfolio was able to provide for all of our needs and continue to grow. And so now that's all I do full time is I just manage our investments and grow the portportfolio.
Very cool. Very cool. I have to ask, why Guatemala? That is one country that you don't hear a lot of people being expats in. So why did you choose that specific country?
Yeah, it wasn't for comfort. So we contacted our church and said, hey, we feel like we're supposed to serve in some way. And they said, well, we have an opening in Guatemala. So that's where we went. Sight unseen, what would fit in our 4 suitcases, and showed up, and we ended up staying there a year, then moved to Argentina from there. So, and then a bunch of other places.
Very cool. Nice. I did a study abroad long time ago in Argentina. We were in Cordoba, and beautiful country.
We did some work in Cordoba as well. Yeah.
Nice. Yeah. Very beautiful. Well, cool. I'm always jealous of people who, got the start in real estate where, their parents were doing it and then they started with the house hack. I feel like that is the best way to do it. If you're, really young, you're in college, trying to figure out a way to cover your expenses. Even if you can get your parents to help you out, get that mortgage or the loan, and do a house hack. It's a perfect way to get started in real estate. So it's awesome to hear you kind of got that start. So you had your initial goal was 1 unit per year, and you started adding on every single year.
Yep.
Did you guys, at one point, you guys moved away from long term because now you're doing sober living and you're doing short term rental? When did that transition happen for you?
Yeah, that's another fun story, real quick. Because we're living overseas and all of our apartments were long term tenants, we couldn't just come back and move into one of our units. It felt a little bit uncomfortable telling somebody, "Hey, we need a place to stay," when we had 17 places in the town, right? But they're all full. So we had someone who generously let us stay in one of their houses that was vacant, and we showed up at midnight, super tired, flying all day long. Walk in, and the house was flooded. And so we got off the main, called the owner, got him out of bed, and then went and got a hotel. So me and my family of 5 were just like destroying this hotel room. And I wake up in the morning, I'm like, we can't live here for 3 weeks. We've got to find something else. And my wife said, this was 2016. And my wife said, oh, have you heard about that new website, Airbnb? And I was like, no, what is it? And so I logged on. There was only 3 homes big enough for our family in the entire city of Boise. And they wanted $200 a night. And I was frustrated and I was upset. Why would they charge so much money? And then I was like, wait a minute. How much am I getting each night for my units? It was $30 a night. So I started thinking, okay, maybe we should consider pivoting here, because there's either nobody wants these things or there's way more demand than what there is supply. So we decided to test out 3 of our units. And within 3 months, we flipped our entire portfolio over to short-term rentals.
Oh, wow.
Yeah.
That's crazy.
It was performing so much better than long-term rent.
Yeah. So you don't often hear people taking their existing portfolio and then moving it to STR. A lot of people, they have short-term rentals as the strategy, and they go out looking for properties to buy with that intention.
Yeah.
So tell us about that, that specific transition. You already had a portfolio of long-term rentals. You were renting them out. What did you have to do to transition them to STRs? And then how did it go once you actually got the ball rolling?
Yeah, well, that's great insight. In 2016, pretty much you could just get anything, take your iPhone, take a photo, and it would rent out, because it wasn't an established industry. It wasn't sophisticated, which was good and bad. I mean, it made it kind of hard to manage when there weren't really the tools that we have today. But the market wasn't very picky, and so we just took our rental grade properties and turned them into short-term rentals. Now, from there, I began to realize, okay, well, this isn't exactly what people are looking for, like the fourplex or the little tiny 2-bedroom apartment. So we began to basically 1031 exchange into other properties that were better short-term rentals throughout the process. But in the moment, we basically just bought the furnishings and stuck them in there, took the picture, created the listing, and away we went. So wasn't super sophisticated.
Did you? I'm sure you started out with like literally keys, giving people's keys versus the keypads, and
that after 3 months. Now I'd hired a manager because we lived overseas, but I got sick of hearing the drama of the keys. So like 3 months later, we went and got the Home Depot coded locks.
Yeah,
which isn't very secure because everybody got the same code, and eventually we went to digital locks so we could send the codes to the doors and all that. So yeah, quite an evolution of the process.
Yeah. Well, Ann, you have, I'm sure, a unique perspective because you were managing this entire portfolio of short-term rentals from an entirely different country.
Yeah.
Which I feel like you probably in that experience got pretty good with the operations, with the management. Tell us about that. What were the tools you were using? What were some of the kind of hacks that you found that really helped you automate it and make it so it's not something that you had to be focusing on all the time?
Yeah, I always tell people that if I was in the States, I probably wouldn't have been disciplined enough to farm out everything, to not farm out, but to build the team that does the work. And it's probably the best blessing of being so far away is I had to build a team. So I built a business that would pay its own bills, and I wasn't giving my time away for free. I spent maybe 5 hours a week just kind of keeping an eye on things, answering kind of the bigger questions, approving big expenses and that kind of stuff, doing the accounting. And so that was the best part of it. And when we very first started out, we were managing all this like it was in fact, I hired my long-term property manager to do the short-term management, and all of us thought, oh, it's going to be relatively similar. Not at all. And I remember thinking I got to get like a rental agreement. So I'm searching for software that would give me an automated, like a DocuSign document. And that led to me paying a lot of money for like big software that does everything. And, so we just kind of built and bolted on different aspects of it, one piece at a time, then got pricing, software, and all the stuff till we got where we're at today. So
yeah. So today, what does your team look like? How many people do you have managing the portfolio? Just kind of give us a breakdown of what the structure is like and what tools you use.
yeah, we have 12 people that we would consider to be full-time in the company. We're hiring our 13th one now. And we're in 3 different markets. So we have a handyman in each market. We have cleaning crews in each market. It's not included in that staff count. We hire services. Then I have interior designer and CPA, and we have our remote team. We have 4 people remotely that handle all customer service communications.
Yeah.
So they're in Mexico. So
nice. Yeah. Yeah. I've found for customer service type things, it is best to hire out, but it's also really difficult. I feel like you have to hire them from the right country because sometimes,
100%,
I used to hire from the Philippines. They speak English, but the accent is too thick and it's difficult, and you get some negative reviews there. So,
and there's some cultural issues too that are hard to communicate. And yeah, I've had the same experience. I still have a Filipino on staff, and she does a great job, but she's not in customer service. And my 4 people who live in Mexico handle all the customer service, and they do a great job.
Perfect. Cool. So STR, it's a big part of your portfolio, but you've mentioned sober living. It's a very unique strategy, a very unique model to go after. Tell us about that. How'd you get into it? And then how does it, you got to teach me because don't know too much about it. So tell me about owning sober living facilities.
Yeah. So through the brand, The Unexpected Investor, I have a community of investors who we all share knowledge and encourage and support and hold accountable and learn and share contacts. And one of my members does sober living. And he reached out to me and said, hey, I'm trying to figure out how to grow my portfolio. I don't have any more of my own capital. And he knew that I had raised funds to create basically syndication partnerships to grow. And so long story short, I looked at his business model. I went and visited his sober homes and was so impressed. I decided to partner with him. And so we've started our first sober living fund. We have 2 of our sober homes already purchased. We're going to do 3 more this year. And our first home is already completely stabilized and up and running. So basically the way it is you find a house that's 2,500 square feet or bigger, so a bigger home. You try to get 8 or 9 bedrooms. We typically convert the garages into bedrooms, 2 bedrooms as well. And they have to have a certain number of bathrooms and common spaces and refrigerators and all that kind of stuff. And we run a sober program on top of that, like an accountability small group program on top of that, where people are assigned to us from whether it's drug court or a probation officer or somebody self-checks in as like a family intervention or something like that. And they come in and they enter our program specifically. And the whole idea is that we're investing in the real estate from the real estate side, but we're also providing a service that's just at a break even for the residents that come. So it's really kind of 2-faceted. If anybody's familiar with co-living, it's basically the same thing as co-living, just with the sober program added on top, and like policies like absolutely no alcohol in the house, no drugs in the house. And there's a peer group that leads the house, that kind of stuff. But other than that, it's the same as co-living.
Interesting. Okay. Is there, you've mentioned drug court and, people in rehab and that kind of thing. Who is generally paying the rent? Are you going through, who is paying the rent?
Over 90% of our rent is collected directly from our tenants.
Oh,
now
okay.
Now another difference from co-living is we're going to be the cheapest housing in town.
Yeah.
And oftentimes, so guys can choose between double occupancy, so they'd have a roommate, which makes it even cheaper, or they can have single occupancy. But our single occupancy room it's only $700 a month. That's cheaper than any co-living option out there. And single is $550 for a double room. And 90% of that money comes from the resident or their family. It could be that their family's supporting them and then they write us the check. We have a little bit that comes from different churches that have different like charity programs for their members. And we're just starting to get into Medicaid, which takes a ton of work to get approved for it. But then once we get there, that'll probably bump that up to maybe 20-30% of the total could be coming from Medicaid. And there's a couple other small programs like government programs that helps as well. But most of it comes from our guys and, guys or girls, not in my fund, but my partner has another house that's just for women with kids. We do require that they have a job. If to get into the house, they have to have a job, and that's one of the kind of the training things that we do to get them used to that rhythm.
Yeah. That was actually going to be my next question. What are, I'm sure the requirements differ for who you allow in to be a resident. I'm sure, criminal history isn't as big of a deal.
It's not an issue. It's not an issue. And that's why the drug court has really latched onto us. And there's a couple other companies out there doing something similar. But we'll let anybody in as long as they agree to the policies and they understand, there's low tolerance for some things and no tolerance for other things. And so they could lose their spot in the house and they got to be serious about sobriety and that kind of thing.
Very cool. Very cool. So tell us a little bit about the program that goes on top of this. You have the real estate, you have the actual house. You're adding an additional service to this, being the program itself, the no alcohol sobriety program. How do you structure that? Is there a third party that does that that you hire to do it, or how does that work?
Yeah, so my partner in this, so I'm kind of the real estate and the finance guy, and my partner's really the sober program guy. So he's got his own system set up and running. It's called the Phoenix House, which sometimes confuses my network because I live in Phoenix, but those houses are in Boise, but it's Phoenix like rising from the ashes concept, right? So the Phoenix House is the sober program, and they have 5 or 6 other homes already established, reputations with drug court and all that kind of stuff. And so he has a regional manager that is a graduate of the Phoenix House who came through the program and does all the counseling and the accountability. And then each house has a house leader that's living there, that's in charge of kind of the top things, and then a peer group that is in charge of setting the rules and dealing with behavior issues and holding people accountable. And on top of that, everybody has to be a part of some kind of a recovery program, whether it's AA or Celebrate Recovery or whatever it is. And they have to attend a weekly house meeting as well and just have that extra layer of accountability too. So that's the program.
Very cool. I love it.
Yeah.
All right. Well, hey, I did just take a peek at the clock and it looks like we've run it down. So it is time to move us into the quick question round. Are you ready?
Yeah, you bet.
All right. It starts with education. It could be any form. It could be a book you've read, a movie you've seen, a conference you've gone to, anything. I just need 2 recommendations, one for general life wisdom and then one for real estate.
General life wisdom. I really love the book. I'll give you 2. Good to Great, which is from back in the 90s, early 2000s, where it's assessing, it's a famous book, but it's assessing companies that went from being average or good to becoming like world-class companies. And just the concepts in there, I think about them all the time. It applies to my business. And the 21 Immutable Laws of Leadership from John Maxwell. It's also an older book. Today we have the one thing. Well, John wanted the 21 things, right? I can't remember any of them, but in life, things will happen. I'll remember, that's one of the laws that John talks about of leadership. That's really impacted my life. Real estate, I mean, everybody says rich dad, poor dad, probably. I think what's important about that book is coming from an entrepreneurial family and already having a bent towards real estate. It just like cemented my understanding of why that was so important. Just the concept of don't buy liabilities, buy assets. And what I always say is buy assets that go up in value and pay you a paycheck, right? Not that I'm anti-gold or anything like that, but you're not getting any dividends from that. And real estate is just so powerful for building wealth. That whole concept of buy assets that go up in value and pay you dividends. And nobody's really communicated that better than Rich Dad Poor.
Yeah, no, it's a classic, and you're right there. It has been recommended quite a few times on the show, but for good reason. It's a good book. It doesn't tell you specifically tactics, how to do something, but it'll definitely tell you why you should be doing it. So that
it helps explain the mindset of why would you be willing to go through all the hassle, because it's a lot of hassle, owning real estate. So,
cool. All right, next question. This is for your younger self. So let's go back to the Brian who was just buying that first duplex that he was going to house hack back in whenever that was. Go back to him, look him in the eye, give him one piece of advice moving forward.
Man, I would say stick to your goal of adding a unit or more every year. And I was pretty good about it. When we moved away, it got a little bit more complicated. I wish I'd have pushed myself to just continue to add. And the timing, that was in 1996. Nobody wanted to live in Idaho, which was the perfect time to buy a property because it was cheap and the rents were not great. But if I could have built a portfolio a little bit faster, I mean, man, where would we be? That kind of drives me nuts, though, when I hear people today, if I was alive then, I would have bought everything. Well,
Right.
There's always, if there's a lot of deals to be had, there's no money. And if there's a lot of money, there's no deals. Every market is a challenge. So, but yeah, I would have told myself to stick to that one unit at least per year, if not.
Yeah. I'm going to put that in the bucket of I wish I started sooner. That is something that many people come on the show and say, and whenever they do say it, I have to point it back to the listener. If you have not completed your first deal yet, this is your kick in the pants. Go out there, get it done, because so many people that come on this show, they say they wish they got started sooner in real estate. So it could be anything. Doesn't have to be anything special. Just go out there, buy a single family, get your first deal done, get that ball rolling. 10 years later or 10 years down the road, you will be happy that you did. So
if I could add on top of that, I would just want to say you're absolutely right. And you're going to tell yourself, yeah, but the market conditions aren't right yet. They will never be right. That first duplex that I bought, I would never buy today. But if I hadn't bought that duplex, I bought it brand new from the contractor. So there's no way I'm going to create any equity. And I don't do that anymore. But if I hadn't got started, I wouldn't have learned how to be a landlord, and I wouldn't have had the power of the clock killing my debt, increasing my value, and teaching me how to be an investor. So get started.
Yeah, I can't remember who said the quote, but and I don't really remember the specific quote itself, but the gist of it was every deal you buy is a good deal 10 years down the road.
Yeah.
So if you just hold on for 10 years, it's going to be a good deal. And the important thing is really just the momentum. You need to get the momentum started so you can, 10 years down the road, you'll be like, I wish I started sooner. So.
Yeah, you don't want to be 60 and saying, I didn't prepare, Yeah.
Yep, exactly. All right, next question. This is about the U.S. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Yeah, I'm not invested in Texas, but when I go to my next market, when I go to my fourth market, it's likely to be in Texas unless conditions change between now and the next couple of years. I'm still building out my portfolio in Phoenix. I've got a specific target that I want to hit and then be done here. And so Texas, I don't know which city. It's going to be one of the markets where there's landlord friendliness and good jobs, a diversity of jobs and population growth and that kind of stuff. So I haven't nailed down the city yet, but that's likely where I'm going next.
Yeah. I'm in DFW, San Antonio, and Lubbock. Absolutely love Texas. It's a great.
Well, maybe
great
I'll reach out when I'm ready to jump to the next market.
There you go. All right, next question is about finding deals. It all starts with penning that purchase agreement and getting in contact with the seller. So what is your favorite way to generate leads and find new deals?
Yeah, I've settled in. I've got several wholesalers here in the Phoenix area that know exactly what I'm looking for, and it's very, very specific, and it's not necessarily what everybody else is looking for. And so when one of my wholesalers finds it, they call me before they shoot it out to their whole group. And if I love it, I'll say, I'll take it. And I'm not going to argue with you on price unless it's obviously off, but, and I'll just grab it. So that's how I've gone about it. I've thought about creating my own marketing, and I may still do that at some point. I'm extremely busy and they've done all the hard work. I'm willing to pay them the $10,000 or $15,000, which I would have paid in marketing expenses anyway, to just get this stuff handed to me on a platter. So,
Yep. And that's in the bucket of relationships. Relationships are so important. It's how you get the ball moving in a lot of the areas. So, good call out there. Next question is about lessons learned. Not every deal that we go into goes the way we expect it. In fact, many times, if not every time, something goes wrong. And that's when we get to learn a lesson. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
Yeah. My brother and I went together to buy a a 44-acre parcel up in the mountains it has a river running right through the middle of it. It has natural hot springs on the property. It's forested. It's beautiful, great location. And he and I wanted to build like a family legacy property. And that was in 2020. And we're still dealing with nightmare headaches, roadblocks, governments, Forest Service. I mean, it has been a nightmare. We should have just gone and bought a house that existed, and then we have our mountain escape. So
Yeah.
yeah, I mean, just the whole concept is stick to what you know,
Yeah.
and just stick to that. Make your money in the market that you understand and the asset class that you understand, and then take that money and then go play with it. You
Yeah.
don't try to mix the two things together. At least that's the track that I'm going to take going forward.
Yeah. Yeah. And development is a completely different ballgame. There's so many different little aspects that you don't quite, I mean, if you haven't done it, you wouldn't know it.
Yeah.
And so it's definitely it's not something I'm keen to jump into.
And I've done a little bit of ground up, but it's in my own backyard and in a city, and everything's different in this place. So yeah, big mistake.
Yeah. But yeah, sometimes the stars align and everything goes to a plan. So let's see that highlight reel. Take us back to one of your favorite deals and tell us how it went.
My favorite deal was in 2009. And for those of you who weren't actively investing at that time, if you were to pick up any newspaper, it would be capitalism is dead, real estate's never coming back. Okay, so again, for all you Gen Zs and Gen Xers that are Gen Ys that are saying, well, if I was alive, I would have bought everything in 2009. Well, we weren't sure. I mean, we thought maybe real estate would recover, but is it going to take a decade or 2 decades, or is it just going to stay stagnant for our lifetime? We didn't know. And so anyway, 2009 was kind of like the height of the hysteria of the market. And I had some money. I had sold a couple of things before the bubble popped, and I had some cash, and I was looking for a way to invest. I found these 4 townhome lots that were going up for auction because they couldn't sell them. The guy couldn't get out of them, so he's fine. I'm just going to fire sell them at auction. I showed up with my pregnant wife, and there was only us and 2 other buyers there. And the seller was you could just tell his head was about to blow up. And we ended up getting 4 townhome lots for about 20 cents on the dollar. And the guy he paid $80,000 for the lots, and we paid less than, I think, $16,000 per lot. And we built our own, basically a fourplex, 4 townhomes in a row. And that building alone has gone up in value by over $1 million from what we paid for it. And it's pumping out $40,000, $50,000 in free cash flow every single year. So that was from 2009. So that is, the stars aligned, the market conditions were right. And I think the best part about that is I was terrified.
Yeah.
Is this going to work? Can I even get financing? That's another thing. In 2009, getting a loan was very difficult, even for people who were established. So I ended up having to pay cash for the whole construction project because I couldn't get a construction loan, and then started to refi after we had them all stabilized, like at 50% loan to value. So, but it all worked out, and I still have those four homes today, and I'm so glad we did that. But it was scary, super scary.
Yeah, I love that. And you're 100% right. Like, hindsight's 2020. People are always like, why didn't you buy more? But you just don't know. Like, my first investment I ever bought was in 2014, just a little bit after college. And it was a duplex or triplex. And after that, it went well. Surprise, thank God it went well. But after that, prices kept going, we're going up a little bit. And everybody I talked to is always like, oh my God, it's so high. It's never going to go higher. And this is 2014, 15.
Yeah.
And so I was scared to pull the trigger on another property because I thought that was it. It was maxed out. And we're talking like, since then, it's more than tripled, or I don't know about tripled, but it's gone quite higher here in Seattle. So you just never know. And it's hard to, make that call in the moment. It's always scary, but you gotta do it. If the cash flow makes sense in the moment, you just pull the trigger.
Yep, exactly.
All right. And that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a 2-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, you can go to my website, theunexpectedinvestor.com, or any of the social medias at Unexpected Investor. And like I mentioned before, I wrote a book about our process. So when we were living overseas, we were making very, very minimal wages, less than $10 an hour. And yet we were still able to build a multi-million-dollar net worth and portfolio that's covering all of our expenses. I retired at 44. And so the Hacker Method book is how we did that. And the community is helping people. You can read a book and you can, take some lessons, but then having accountability and being able to ask questions and get coaching. So that's what the community is about. And you can find all that on the website.
Perfect. I will put that link in the show notes. So if you guys want to reach out, all you got to do is click the little more in the description. It's going to pull down that full description, and in there you can find Brian's links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Yeah, thanks. A lot of fun.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe with realestateinvestingclub.com. If you guys want to support the show, just leave us a review or give us a thumbs up or any of that stuff. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.